Welcome to Mavens of Data. This week we're speaking with Matt Dancho, founder of Business Science and co-founder of Quant Science. One part of the discussion that really stood out to me was his take around how protecting intellectual property and building a strong portfolio are essential for career development. Hope you enjoy this episode. Thank you so much for joining, Matt.
Awesome to have me. Super glad to be here, Kristen. Always a pleasure. And yeah, I feel like I know you're like family, right? Because we've worked together in the past. We've traveled together. I still remember traveling out to what was that, California? We did San Francisco at one time for a conference. Yep, that was good times. So yeah, excited to be here.
Awesome. So for those in the audience that do not know you, can you tell us a little bit about your experience working in data science and then even starting business science, and now you're starting Quant Science as well. So I'd love to hear some more about that.
Well, for sure. Well, welcome everybody. So yeah, this is I've kind of had quite the journey. So I'll go way back. So I graduated back in, I want to say like 2006 with a degree in mechanical engineering. So I have like no formal training in data science. And I'm just going to throw that out there. So if there's any of you who feel like, you need a degree to get started in this field, I want to put that myth, put that one to bed. So I am proof that you don't need to have, necessarily a PhD or whatever. I have a degree in mechanical engineering. I quickly found out that that's not really what I wanted to be doing with my life. It was kind of I just wasn't super interested. My heart wasn't into it. So in 2013, I found out about data science. And what I did was, like a lot of people back in the day, I just kind of got hook, line, and sinker. Like, it was relevant. It was useful. I was the only one in my company who knew how to do this stuff. My CEO, he thought I was like a magician, and it was really cool. I was like, all right, so this is something that I actually enjoy. My heart's into it. It's exciting and fun. You got to learn, it was challenging. I had to learn R back in the day, and then also eventually learned Python as well. And, my background, I had no coding experience. I don't know about you, Kristen, if you were the same way, but didn't really know too much about coding and I had to figure it out. And kind of stumbled my way through it. Like many people, I was very unconfident at first. It was, kind of a real struggle. I was constantly battling, am I ever going to be able to get this right? Am I ever going to be able to do it? But the good news is I pushed through and I figured it out and kind of, started to get some small wins at first with my company and then the company I was working with at the time. And eventually that led to some bigger things, both with that company. Eventually I broke into consulting, broke into eventually, what we're going to talk about today. Finance now is what I'm learning. And nowadays too, AI. That's the biggest thing. Kind of feels like data science back in 2014 all over again. Very new, companies really want it. So starting to learn that as well. That's kind of been, my shtick is always learning, always trying to figure stuff out. I've had a lot of different careers, both working with companies. So Bonnie Forge it's a very small company I used to work with. Learning data science back then helped me grow my career. I mean, the CEO, I started there kind of as just, a normal engineer, mechanical engineer. And then by, within a couple of years, I was reporting to the CEO and I was doing totally different stuff, like sales analytics, working with, actually doing traveling to work on closing big deals and working on accounts and doing some of the analytics behind some of those deals and analytics behind the customers and lead scoring and forecasting and this and stuff like that. So Yeah, it's been kind of a wild journey. You know, I've kind of dipped my toes into probably most areas of data science that you can possibly get into.
Yes, you have.
And like not, you know, like Kristen, I know you're good at forecasting. Forecasting is kind of like one of the things that, you know, I really made a name for myself with as well. Doing things like lead scoring and customer analytics and actually trying to figure out like where we should spend our time. Which customers do we need to nurture a little more? Which ones do we are ready to buy and should we focus on them for deals? So like, yeah, it's been kind of a wild ride. Yeah.
Yeah, that's awesome. No, and I'm sure we'll get more into, how it's been a wild ride, but I loved how you brought up being slow to come into the coding, because I see you as somebody who is just so phenomenal. And when I think about my own experience, I took a Fortran course in college and then my master's in statistics. I had to take R, but really if I could avoid doing things programmatically, I would do it in Excel first.
Yeah.
And then even, right, I took your data analytics course because in 2018, I was still reading blog articles. It's like, oh, if I can avoid the tidyverse, I'm going to try and find something with a package that I can do it without. And it, really, it's, been in the last 7 years that my coding has really taken off, but I was like slow to adopt.
So same here. So the toughest thing, you brought up Excel. So I was like an Excel kind of like guru at like, initially that's how I was doing all my customer analytics. I wasn't doing like forecasting in R, or I wasn't doing, like lead scoring. I was just doing it in Excel and making like a linear regression in there. And the pivotal point, because it was really tough to let that go. I'd spent like 5 years mastering Excel. I knew like every single function in there. I knew VBA. So I was kind of like a, decoder, but like not really. And then that was like the toughest part, was like letting that go, because at first I could always do it faster in Excel. Eventually that changed, but like it was probably a good like 12 months to 2 years before I really felt confident enough to like say, hey, I'm ditching Excel and I'm just going to be working out of R now. So yeah, it's tough. It was tough at first.
Yeah. And then you've gone on to build a bunch of libraries. And the first, I think Tidyquant was actually the first one.
First one I ever built. Yeah. In R, Tidyquant was a financial data analysis, basically a toolkit. So back then, it was kind of the Wild West, 2015, 2016 timeframe. And so I saw a question in here, Matt, did you learn any of these skills on your own? Did you follow a type of program? So I actually took a course on R, and it was through Johns Hopkins University. It was pretty rough going with that thing. I'll be honest, I don't want to sugarcoat it. Like, that was not the easiest program for me to wrap my head around. But first off, it didn't use like any of this tidyverse tooling that was coming out, and the tidyverse was really the thing that like started to click with me. Like I really, identified with that. But it was using base R, and base R is just it's kind of scary. Like, nothing's consistent.
That was the Wild West.
Yeah. So I kind of worked my way through that, and then I saw that like all this new tooling was coming out, these new R packages. Hadley Wickham was leading the charge. He had ggplot2, he had dplyr, he had other packages, like new ones that were coming out at that point in time, like purr. And then he kind of wrapped it into this whole thing that was like this thing called the tidyverse. And that really clicked with me, because I was like, oh man, this is making it like R is now much more consistent. It's much easier to use. I can do data analysis even faster, as long as you learn like the subset of packages that he was putting together, him and his team. So when I did that, my claim to fame was then taking that tidyverse ecosystem and combining it with financial data. So at that point, I wasn't like working in finance. I didn't even have any jobs in finance. I didn't have any clients that, needed financial work. I was just doing it because, uh, I started investing in 2007 timeframe. And that was right before everything went down with the financial recession, subprime mortgages. I was doing my analysis back then. Actually, I wasn't even really doing analysis back then. So I thought to myself, Tidyverse, great for data analysis. We've got like some other packages and libraries that are really good for finance, but they aren't like the integrated in the Tidyverse. So why don't I make a package that kind of combines and blends the two? And that was the birth of Tidyquant. And that thing just took off. So there must have been a lot of demand for something like that. Because I know within a month of releasing that R package, I released it December 31st of 2016. By end of January 2017, I was already getting requests for people to like help them, like financial companies, like small financial companies would reach out to me like, hey, can you build something with Tidyquant for me? I was like, sure. What do you want to build? And that's how it just kind of took off like that. And that was actually how I got started with business science, because it initially started as a company that was a consulting firm. And I made an LLC just to kind of like, protect, my assets versus, and have an actual business to like, run invoices and all, and funds through and all that stuff. So yeah, taking me back.
Yeah, that's awesome. And so with that, like what sort of challenges did you experience trying to work with financial data, and what can other people expect if they want to work with financial data and they haven't before?
Sure. So, like anything, I mean, there's going to be new things you have to learn, right? So the toughest challenge with finance out of everything for me has been, the lingo, understanding what they're talking about, like when you do like a fundamental analysis and there's like return on equity or return on assets or, PE ratios, price to earning, earnings per share. When you get into like price data, it's all time series. So you have to kind of learn that subset of data analytics. A lot of data scientists, it's surprising, they go through like a program and they don't learn time series. Like so absolutely critical. Like not even just if you get into like sales forecasting for a company, but if you're working with, financial data, pretty much all of it's time based. Yeah. So that was kind of in my wheelhouse already, because I had been working with a lot of like forecasting stuff through the company I was working with at the time. But the real challenge, I think, to me is all these niches, like they do the same techniques. I don't know if you have experienced this, Kristen, but like anytime I like worked with like a new client, they always had like the new, they had their own terminology, their jargon, the lingo. And that's like half the battle, is just like figuring out what the heck are you guys talking about?
What is your language?
Like, yeah. But like once I figured that out, then it was like, oh, you just mean, okay, when you're talking a factor, that's just like a feature. Like that's like in data science, like, okay, I'm going to take like, your returns and then divide it by the earnings, or I'm going to do like, earnings per share divided by the price, like, okay, I got this. So, it's kind of just like learning their workflows, learning like what they do. And any niche, is going to have their own unique things. And that's the challenge, is like getting that domain. We call it domain experience in data science, but like for finance, it's like learning that domain. You need to understand, they call it a back test. Well, what is that? Well, that's kind of like, in data science, it's like kind of like time series walk forward analysis, and drawing those parallels. I think that's probably the biggest challenge.
Mm-hmm. Okay. And so we've talked a ton about R. We talked about how you moved to Python. When you are working with financial data or stock data, how do you think about which language you're going to choose and what's the right tool for the job?
Sure. Yeah, that's a great question. So I don't get me wrong. I have not like given up on R. I still use actually R to this day every week. So and if you love Python, like quick show of hands, like how many of you guys if you can put in chat like R or P for or R or Pi, like what are you guys normally using right now if you're using a programming language? Or if you're not using a programming language, are you using like Excel or Tableau or something like that? Something else?
Lots of Python. It's all Python.
Yeah. Okay. So all right. Well, we got
And
some Excel, Power BI.
Yep.
Okay. Well, so all these tools are great. And for me, it's you kind of have to have like part of growing in analytics and finance and all of these kind of areas is you really need to, like, for me, it's all about strengths. And I need to know what is the desired outcome. Like, am I going to be working with a team? If I'm going to be working with a team, I'm probably going to want to use a tool that they also use. A lot of times they don't know R, but they may know Python. Okay. So case in point, I founded this company called Quant Science a couple of years back, and we're doing algorithmic trading. And this is I'm a co-founder in that company, and the gentleman that I co-founded it with, his name's Jason. He's a big Python advocate. So I knew rather than trying to convince him to use R, I said, all right, I'm just going to I'll work within the Python ecosystem. They have enough packages. It has been a learning curve for me, but like, because I'm working in a team, I'm going to want to use something that the team also uses. It just speeds things up. If I'm doing ad hoc analysis where I know it's kind of like a one-off where I've gotten a question and, could be the CEO or an executive, needs something and they need it fast, probably going to do that in R because I know Tidyverse inside and out, and I can, get a report done quick. Case in point, every couple of weeks at Business Science, we do analytics on our customers. I run what's called Facebook ads or meta ads. And what we have to do is segmentations. I have to take a look at my email list. We update that, and we have to like figure out, all right, which are active subscribers, which are, we have to like basically do a lot of like, it's not even that complicated, but it's a lot of like filtering and stuff. I do all that stuff in R because it's like just me. My marketing guy he's what's called a media buyer. So what he does is he actually like spends the money, but he doesn't deal with R or Python. He deals with CSV files. So he's going to take a CSV and then upload it into the system. So all of those types of things, like it's just depends on what is the right tool for the job. If it's analytics right now, I'm using probably, if it's one-off, I'm going to probably do something in R. If it's in finance, I'm generally building software in Python, and that's because, the fund that we're building right now, we're actually getting ready to launch our hedge fund. And we are, using Python for that because my co-founder, he needs to be able to place the trades in Python. I need to do the back testing and the research in Python. And it's kind of like a team, good team effort. If we're talking AI right now, like I view Python being very stronger in AI currently. And I see that probably continuing. So AI, I'm doing that in Python. LangGraph, LangChain, they've got the whole ecosystem. It's very nice. They got a lot of different frameworks. If you don't like those frameworks, you can use other frameworks. They got Crew AI, they got Haystack, they got about half a dozen other ones. R is kind of growing in AI, but it's mainly for like the data analysis piece. They aren't like trying to build chatbots. What they're trying to do is like use AI to like convert unstructured information to structured information. And that tool chain is very good for data analytics, but like if you're trying to do something else, like create vector databases and stuff that your teams are going to need and custom agents and this and that, Python. So
Yep.
yeah, it's been kind of a wild ride. I've had to learn a lot of new things. Hopefully you guys see that. If you think that you're just going to learn a couple of skills and break into this field and then you're done, hasn't worked out that way for
A little
me.
more. Yeah.
But and it keeps things exciting too. Like I'm constantly challenging myself. So
Yep. No, very similar. I mean, I was a hardcore R person. And then in 2017, I had to interview for a job that wanted Python. So I literally took a Coursera course and learned enough to get asked FizzBuzz and had actually studied it before. So I got lucky. But then, went off on my own and all my clients wanted Python. So still to this day, if you ask me to create a map where the different states were colored, I'm going to go do that in R. If I'm starting a new, even if it's a personal project and I have to work with a couple APIs, I'm going to do that in Python.
Yep.
But I will never forget my love for R.
But yeah, and to your point too, like how did I learn it? How did I get started? So back when I was learning, there weren't a ton of course options, but nowadays there are so many more. Like I know Maven's got a great system. The thing is like for me, it's all about speed. Like how can I like basically download the information, like kind of like the Matrix. If you ever watched that movie back in the day, how can I like absorb that information into my brain as fast as possible so I can start applying it? And that has served me very well. And even to this day, like,
yeah. Are there any like programming data science skills that you believe have helped you build your business?
So skills, yeah. So all of the skills that you needed, like that I've needed to be able to kind of grow my career. So my career is kind of, if we go back to like 2016, so my goal was just to like it really twofold back in 2016. All I wanted to do was be able to like grow my career at my company. I wanted to become a leader in, data science at that point in time, and be the kind of like the recognized go-to person for those types of like more advanced analysis. And that helped me a ton there. In parallel with the finance, my goal was simply to make better investment decisions. I knew I had weaknesses because of some of the stuff that had happened previously where I lost money, in my investments. And I wanted to take some of these new skills I was learning, like data analysis, time series analysis, and start building those and strengthening them to be able to make the better decisions. Okay. So as we kind of grow then in the years, so fast forward to 2017, my world kind of changed quite a bit. So I started to get a little more notoriety. I started traveling to conferences and doing speaking engagements. And because of that, my goals actually shifted. So they shifted from just trying to be the best in, data scientists inside of my company. Now it's trying to actually build a business around, data science and get clients and figure out how to, what their challenges are and how to like come up with solutions and see where I could fit in the mix. So 2017 was all about consulting. And I never thought in 2016 for a second that I was going to be consulting. Like 2017, I started getting opportunities and started to get a little bit of extra income flown in. And that was pretty cool. Especially because my wife, she worked in real estate at the time and her income was all over the place. Never like it was seasonal, like spring time frame, she would do really well. But then, come the winter time frame, nobody like really buys out. Like just demand kind of goes down. So it was cool having like an extra income stream, so I started becoming like a little bit of an entrepreneur. And the skills to your point, it starts off very technical, right? You need to like grow data analytics skills. You need to grow and be able to produce things. So whether that's generate reports or make web applications or APIs or whatever that the company needs, however they like to get their information, served to them. you got to do that. So I've always kind of let the demand drive the skills that I'm learning.
Yep.
And then when you get thrust into a new, opportunity, you got to quickly be able to pivot, and you got to be able to see like, okay, now that I'm getting consulting requests, these guys are like asking questions that are way outside of my comfort zone. What do I need to learn? And a lot of that is learning the lingo in their niches. Like finance was a big niche because of Tidyquant. It naturally generated leads, and I had to like kind of boost my skills in that area. I had to research a lot of like what analytics they were doing, because the last thing you want to have is like a new client or a customer coming to you and saying and talking to you about stuff, and then you not knowing what the heck they're even talking about.
Mm-hmm.
So, all the skills in building a business too, eventually you have to learn like stuff that's totally unrelated to data science. So you're learning soft skills. How do I, speak to like and do presentations? How do I host webinars? How do I talk to people and, with the goal of helping them, but also gaining their trust, right? And these are all like skills that have really like over time, it becomes less about the technical and more about like, how can I get people to trust what I'm doing? So they let their guard down and, set aside whatever their preconceived notions are about like machine learning and this and that, and allow me to help them. And that becomes like, that's the basis of business science, right?
Mm-hmm.
So business science, I saw a big need because there was a gap when I was like focusing on consulting, and I saw a recurrent theme. All the people that like were hiring me, they didn't like, it was usually like executives that just did not understand what the data science team could do or the data analytics team could do. And then the data analytics team had no idea what the executives really wanted. And spoiler alert, they don't really care about like, machine learning, or they don't really care about like how accurate your model is, right? They care about, hey, are we going to make a profit next month? Or are we going to have to make tough decisions? Like they care about more of like the return on investment and the, all of those things. So it's kind of like, you find these things out, the deeper you go. And, business science was really born around how can I take a data science curriculum and make it more business forward and applied, because those were the two things like that I saw. The weakness of the data scientists is they were very theoretical at that point in time. They were not very applied.
Mm-hmm.
They spent lots of time like researching things and knowing how, like matrix multiplication and how to like do, they knew like how principal component analysis worked internally. I was like, all right, well, how do we know PCA is the right tool for the job?
Mm-hmm.
So yeah, it's been kind of a learning skills. I would say if I was learning again, I would focus on how do I get results, quick wins as quickly as possible for whatever role I'm in currently.
Mm-hmm.
And if you let that be your driving force, you're going to let demand now dictate your learning journey rather than, some list of skills that, generally seems to work. But like, if you actually let the demand drive your learning journey, I don't think you're going to go wrong that way. That's what I've always done. And it's really helped.
Right. No, the in-demand skills. Like I've never met a business that didn't care about how things work over time. So
Yeah.
like you go learn time series.
Yep.
And so with stock data, if somebody wanted to go and play today and they were going to try and their hand for the first time working with stock data, do you have any tips for them?
Sure. Yeah. So getting to the finance component of it. So now I spent about 2.5 years of research working with my co-founder of Quant Science. And so to give you a little bit of background before I answer the question, I've been kind of where you are right now. So even though I built Tidyquant, I wasn't like a hardcore quant, right? I still know enough to be dangerous and could speak the lingo, but I wasn't like, necessarily implementing like things like algorithmic trading strategies or things like that. Like, so my goal initially starting out with learning has always been to make better trading decisions. If that is your goal, then the first step is obviously to get your hands on some financial data and start trying to play around with it to see if you can figure out different ways to make those better decisions. So always have a goal in mind. My goal was, like I want to try and improve the Sharpe ratio of my portfolio. Okay. That is a clear-cut goal. All right. How am I going to do it? Well, I need to get my hands on some stock data. So, you can go on to like Wikipedia, for example, and they have like the S&P 500, the list of, stocks, and you can use Y Finance. So Y Finance is a library in Python that connects up to the Yahoo Finance API. All that means is it's, behind the scenes, it's able to download and extract real-time financial data. And you can pull that in with Y Finance for each one of the symbols. So maybe start with just a handful of symbols that you're interested in. Maybe like if you like Tesla, or if you like NVIDIA, or if you like, certain companies, download that stock data. The next step is visualizations are very, very big in finance. You want to be able to chart the data. You want to be able to look at things like maybe what's the drawdowns. So that's how far does that stock go from its peak, from its high to the low, and how does that compare maybe to like, a basket of stocks. So you can look up like the S&P 500. So that's where I would start. I would start slowly pulling data, look at some of the stocks that I'm either invested in or that I'm interested in investing, and then start charting, start looking at metrics like drawdowns, start looking at metrics like their past Sharpe ratios, how volatile the stock's returns are. So to get stock return, what you do is you do what's called differencing, and you can get the percentage return. In fact, I think in pandas it's very easy. It's like dot PCT percent. What is it? Percent difference or percent return, something like that. But it's very easy. And if you have ChatGPT too, just throw it in ChatGPT. Be like, hey, how do I get the returns? How do I look at drawdowns? How do I get a Sharpe ratio? How do I get it? So percent change. There it is. Bingo. Somebody, Radoslaw got it. So yeah. I want to draw a very important point there. So you see how Radoslaw said percent change, and I couldn't think of that on the fly. Don't feel like you have to memorize all this stuff either.
Yep.
And you have way better resources than we had back in the day. We used to have this thing called Stack Overflow going on there. It's like, am I going to get yelled at? Am I going to get, berated by these like,
same as Reddit. Devs? Ask a question on Reddit.
Yeah. Oh yeah, I know. Oh my gosh. I avoid Reddit like the plague. I mean, it is such a negative area. So ChatGPT was like fantastic when that came out 2 or 3 years ago now, and I could go on there and just type in a question, and it would give me like a code snippet, and it would we'll say 4 out of 5 times be correct. That was like such a breath of fresh air, because like it was such a more positive experience. And now it's like, so I try to memorize a lot less now, and I try to literally just leverage the resources that we now have available. A lot of AI resources.
Yeah, no, the ChatGPT experience is way better, because you ask a question and it'll be like, oh, wow, you're working on this type of project. Good for you. That's amazing, which is way better than like, hey, dummy, why are you using this library?
Yeah, ChatGPT was a game changer. If you can't use ChatGPT at your work, I feel sorry for you. They're like, I know a lot of companies, they're very protective of data and security and everything. There's also Llama. I don't know if you've heard of that, but that's kind of like an alternative if you want to be able to access LLMs at work locally. They run on your computer. But yeah, I mean, it's like ChatGPT or any type of like AI like that. Like, there's so many of them now. Game changer for sure for coding.
Yep. All right. Awesome. And so I think it's time to head over to the Q&A portion. Let's get into some questions.
Let's do it.
The first one that I thought was really interesting, this is from Catherine. Could you share an example of how integrating unconventional data sources such as social media sentiment has influenced financial decision-making within your organization? Is that something you played with?
Sure. So social sentiment analysis is really good for like branding. Like if you want to get the pulse on your brand, if you want to, like, I know back in the day, and I'm not sure if the Twitter API, I don't think it's free anymore. It used to be free. And what I could do is I could actually download for, like, I could put in whatever company I wanted to investigate. So say I worked at Coca-Cola. I could put in the Twitter handle for Coca-Cola, like literally pull in all of the tweets, all the data, and I could like do sentiment analysis on that. And that was like so powerful because it really drove the strategy, because we could see which tweets perform the best, and we could kind of like take and come up with new tweets and new blog articles and things around the things that we knew were going either viral if we wanted impressions, or the things that were getting the most link clicks if we wanted to get gauge conversions and those types of things. So that was really powerful. On the financial end, like if we're talking like doing investments, right? I know a lot of people talk about like the use of alternative data and specifically sentiment analysis for financial data. I have never had, like, I have not shown any correlation to positive returns. The problem is that as soon as a news article comes out, it's like the market reacts so fast that you don't have an edge in order to be able to like place a trade on that. With how fast information flows nowadays, it's very challenging. So we use a lot of like price data and fundamental data in our research, and that does have a positive correlation to future stock returns.
Mm-hmm. No, it's a bummer if the Twitter API isn't free anymore, because that was actually, I just wanted to play with, streaming data. And so I did sentiment analysis on Elon, and it was just 2 charts, but it was, live data, and it was how often he's mentioned and then how negative the sentiment was, because this was like right after the takeover. And so, there's, some interesting ones that could probably work, but in general, it's not going to be the norm. Okay. These are all interesting. So Radislaw asked, how do you think trading will look like in the future when everyone will be leveraging AI? Do you think that will have an impact?
Yeah, absolutely. So there's going to be a lot fewer lower level analysts out there. So a lot of these like a lot of the JP Morgans, Goldmans, any of the big financial companies, they are looking very closely at AI because it can summarize information much faster than humans can. Okay. So like if you think about like every quarter, all the public companies have to do a quarterly report. And usually there's a conference call associated with that. They have, they release a PDF of their performance and the risks and all that stuff. AI can now summarize all that information much easier. You just make an AI workflow, and immediately now, like the jobs that used to take like 10 analysts can be done in, and it used to take hours or days. It can now be done almost, immediately with AI. So there's going to be a lot of that. there's going to be, it's in every company, every industry is going through those same types of like analyses right now. Where does AI make sense? Where doesn't it make sense? Anytime that there's, a lot of summarization, AI is going to be very useful for that. AI is also very useful, like if you're doing algorithmic trading, to be able to build the software. I know this because at Quant Science, I'm building a ton of proprietary packages that we give to our students to help them, and also that we're using in our hedge fund. But that process, in the past, it might have taken me 5 months, and now I'm able to do it in like a month. And I'm getting that level of speed up because I'm using these AI resources and Copilots and those sorts of things to help me write the code, right? So it's having a huge impact in those areas. Where do I see, kind of like the future of what it'll look like for trading? I think there's strategies that will continue to serve us well. Any of like the factor-based strategies like momentum, any of the value-based strategies, those will consistently work, and they have stood the test of time. I think what's cool too is arbitrage. So I don't know how deep we want to get into it. I guess this is a finance talk. So companies, if you've ever heard of like Renaissance Technology or RenTech, their big thing is statistical arbitrage. They're fairly nimble because they don't have in their funds, they don't have a whole ton of assets under management. But the problem is like some of these bigger hedge funds like BlackRock's, the Ray Dalio, what's his fund, Bridgewater, they just have so much money that they can't be as nimble as us smaller people can be. Yeah, exactly. So we can buy, small, they have to buy what are called blocks of stocks if they want to make, or they have to buy, they have to look at very seriously at what's called liquidity. All right. And that's how much can they trade? How much leverage can they put behind it? And and generally speaking, that limits them. They can't trade like smaller stocks. They can't trade less liquid assets. We can do that because we don't need to buy like a huge block of it. We just need to find like a small one and that has some edge, and we can do that. So there's really cool opportunities. I think AI is going to have a big part in all of that. I think AI is going to make research a lot faster. AI is going to make, it's going to reduce, the time that it takes to do a lot of stuff. Yep.
That's awesome. I've tried playing with arbitrage before, and I didn't do awful, but I definitely lost in increments
Yes,
to the point where I shut it off.
Well, yeah. So yeah, we have an arbitrage strategy that actually looks at oil refiners. And what we do is we look at their outputs. So 1 barrel of crude oil might be like, say it's like $65 a barrel right now. And it produces, 1 barrel produces, or 3 barrels produces two barrels of gasoline, 1 barrel of, I can't remember what the other product is. It might be heating oil. So the idea is like you look at those relationships and you look for, okay, when the prices of all of those like kind of go up, their products go up, the stock should also go up. And we look for like opportunities where that doesn't happen,
you expect it to be, yeah.
And then that's a buying opportunity because we can expect that the stock will follow the price of those commodities. So yeah, there's lots of stuff you can do. It's not easy, but once you get a strategy that works, it's just iterating and figuring out. Like a lot of data science stuff like translates too. Like if you're learning analytics right now, data analytics, Z-score, we do a Z-score. If you're learning pandas right now, it's all done in pandas, like figuring out where your buy signals are, where your sell signals are. And it's kind of crazy, like how like, I didn't think it was like, there's a lot of stuff that I didn't think were going to be like such close knit. But it's really like, if you have data analysis skills, translating to finance is actually not as big of a leap as I thought it was going to be.
Oh, that's a good point. I should have asked that question.
No, it just kind of came up. Yeah, it's like, yeah, I should have thought to bring that up earlier.
All right. And Masanda asked, hi, Matt, were you always entrepreneurial minded? If not, how did you develop that mindset over time? And what tips would you give for cultivating an entrepreneurial mindset, especially in the context of finance and data analytics?
So I think I was actually like, now that you bring this up and now I'm thinking about it. When I was in Penn State, me and my roommate, Seth, he joined this, we joined this club called Students in Free Enterprise. It was SIFE, SIFE. And before that, I had never done anything entrepreneurial. And that club was like very kind of like, it was a group of other students that were also interested in entrepreneurship. And we would like travel to places. We would, my roommate, Seth, he actually like organized this whole trip out to Pittsburgh as his project for that class. And he made, he made money through it, which obviously the money goes back to the organization. And we aren't trying to like actually truly make a profit, even though that's kind of what it's about, developing those skills. And, I think through that was really kind of, set the spark in me. Because before that, I'd never really thought about it, but I think just having a friend who was interested in that and seeing how it worked and learning from, kind of just making mistakes and figuring things out. I think that kind of showed me that like, the risk was worth it. Another thing too, that we always think about is like, having a job is safer and entrepreneurship is more risky, right? Well, I found through, my entrepreneurial ventures, like in consulting, like once I got to that point, I always felt like having some sort of like, at least a side hustle was less risky, because now I have two income streams. And, if I lost my job, I now at least have something coming in, or I at least have, like finance, for example, perfect income stream. If you're interested in doing, like trading for income, like that's another easy way that anybody has access to like stock data, and you can make, an extra side hustle out of it. Like, so that was always kind of my thinking. Was I wasn't like, hey, I'm going to, quit my job and move out to San Francisco to create a startup. I was never that like type of entrepreneur. If that's you, awesome. That just wasn't me. I was more like, let's take some calculated risks. Let's let demand drive the direction. And then when I'm ready, so I like when business science kind of got, once I got to that tipping point where I was ready to go business science 100%, I'll give you that story if we have a couple of minutes.
Yeah, go for it.
So in 2017, or excuse me, it might've been 2018, I had kind of a falling out with my CEO, and he was kind of punishing me because he felt that I was taking too much leeway with doing with some of the processes that we had talked about, and I was doing these very large like projects through the company, and one of them came back where, we ended up getting awarded like $450,000 for a project, which I thought was a good thing. But then he was like, well, we didn't, we might've been able to get more. Like we didn't do this, this, and this, and this. We should have had a meeting on it. We should have had this. And like, I thought the limits that we had set was like $250,000. And I was just like, John, like, I'm done. Like at that point. But at that point, I already had courses that I was selling.
Mm-hmm.
I had consulting that I was doing. I was working with S&P Global, the same company that does the S&P 500. I was working with MRM McCann at that point, which is a big marketing company out of Michigan. And like, I had all of these other revenue streams, and I was just like, all right, I don't need to do this 9 to 5 thing anymore, and I'm not going to do it. Now, I will say this. Of course, like I made the jump into like, my own business 100%. And then immediately I'm like not making, things change. And I wasn't like, I remember December, that was a really tough December that year. So I quit in August. December, I think my business only brought in like $1,000 that month. And I was just like, and mind you, my wife's in real estate. December, like she doesn't make any money that month. So it was very stressful. So it wasn't like I just all of a sudden went to replacing my income and everything, birds are out there chirping and I'm like, oh, this is grand. This is fantastic. No, it was like, there were challenges. There was a lot of things that I didn't anticipate. But 2019 came around, things picked back up and, I started launching new courses. I started getting new clients, doing more conferences and, you just double down on whatever's working and it all worked out.
Can I ask, so when you talk about the clients that you were working with while you were building your hustle, did you meet those people organically through other networking opportunities or did you find them on social media?
So back then it was a combination. So initially it was because of the conferences that I was attending and the software that I had that I launched. So if somebody started using that software that was in finance and they wanted help with it, they would reach out to the guy who created the software. So it was a natural lead magnet. I didn't realize that at the time. I did not plan that. I had no idea, but that was just the way it worked back then. And I think it still works kind of that way. If you develop a software library that becomes, popular in some sort of niche like finance, or marketing or whatever else, you can get leads that way. And that can be, kind of how it starts. I also did the conference circuit. I would go to a lot of conferences. I'd get invited to some conferences. I almost always tried to take those opportunities if I could do it, because I knew meeting people face to face, they would, some people would become clients, and they would become, and it wasn't like I was just trying to put my sales hat on, although I kind of was, in certain circumstances, maybe a little too salesy at those things. But I think that's just a learning process. And you go through that, you do presentations, people chat with you. And if they like you, normally they always have to like you if they're going to client. And I never really thought about it that way. I was like, oh yeah. So you want to develop a relationship with them first. And the easiest way to do that is face to face. So it was a combination of the two.
Awesome. And then, so I feel like we only have time for one more question, but we have a bunch. And so the questions that I'm seeing are sort of around Python versus SQL, but really that depends on where you're trying to go. Just to give out, the short answer really quickly. Taha asked, if you are already technical, hold on, let me just get this up here. If you are already technical, what are best resources to gain domain knowledge and projects for hands-on experience? Do you have any resources you'd share?
So to gain domain knowledge and projects, I mean, you can do, now with Kaggle, you've got Kaggle, but you also have like ChatGPT. I would say AI is really good for just kind of, getting you up and running and doing quick research. They have like the deep research now. So if you want to like say, all right, come up with a project idea in finance if I'm trying to do XYZ. So figure out what your goal is. Start there. My goal is to get a job at JP Morgan. All right. This is what like ChatGPT or something like that would recommend. And then your job is to fill in, you got to get skills. How do you get skills? You do projects. And how do you get the attention of the recruiters? And how do you get the job? You have to build a portfolio, right? So it's pretty much that simple. Figure out what they need, and you develop a portfolio of projects around that. Now, the mistake I see a lot of students make is they put all their code out there for free on GitHub, and then, you know, that to me is you're basically giving away your IP. Okay.
That's what
that's the Kaggle mentality. Oh, I'll give away all my code for free. So I learned very early on, you got to protect that source code. Even though I do a lot of open source work, I have proprietary packages. We use those at Quant Science. I have proprietary, but what I do is I put together applications now. So Streamlit apps. I used to do it in R Shiny web apps. And those, I mean, all you do is you take a screenshot of it and you describe how it works, and that's your portfolio, right? And companies will see that and they'll be like, I want that. And you aren't giving them access to the code. You're keeping that in a private GitHub repo or something like that. But what do they have to do in order to get that? They have to hire you. Okay. So yeah, keep your code private. That's your intellectual property. Also, most companies and sending people to a GitHub repo is usually a bad practice anyways, because who's going to like go through it? Yeah. So you want to have kind of like a website or something like that where you send them to like a specific project that you've done. That's what I recommend.
Awesome. Thank you. That was an awesome answer. And I do want to go back to John for a second, because I feel like my response might have sounded dismissive. But John, if I was looking at Python versus SQL, I would go look at the job descriptions of the jobs that I actually wanted to apply for. And I'd look at, you know, SQL's going to be everywhere. Does it have Python? If it does have Python, how is it talking about this? Is it like, you know, this looks like serious Python, or, you know, you're playing with pandas, NumPy, and, you know, a little bit of everything? Because the truth is you can learn both. But in the end of the day, if you're working with data, you need to be able to get your data from a database, and that's step one. And so SQL is always going to be useful. Can you get data from a database with Python and manipulate it and join tables in Python? Yes, you can. But getting started in SQL is probably going to be easier. And if you can identify that, like, you can get up and running and find a job with SQL skills, then I would start there. And if the jobs in your area, or what it looks like you're going to, you know, aim for, is going to require more intense Python skills, then you may want to start there, because like I said, you can get the data from the database, and write, you know, SQL type functions in Python and work with data that way. But it all really depends on what it is that you're going for. And Matt, if you have anything to add.
I learn them both. The nice thing though is, like with like AI nowadays, like AI is pretty good with SQL. So, you know, what I would try to do is put some project together, like make a SQL database, or get a SQL database, like the Northwind database is a common one, or, you know, there's different databases out there you should be able to get your hands on. Get a SQLite database on your computer. Start, you know, analyzing it. Use maybe ChatGPT to start helping you with some of those queries, and then get the data too into Python as well. And, you know, Pandas data frame. Pandas has the read SQL function. So if you give it a, you know, SQL string, it'll run that query. and then pull it in as a data frame. And then you can start to do your analytics in Python. You can get a workflow going, right? So yeah, it's the toughest challenge right now, I would say, is you just don't know what to do if you're beginning. And the easiest solution to that challenge is honestly like get a couple of skills and start using ChatGPT and AI tools to help you along that path. In addition, courses I think are always a good investment. So like the Maven courses, those will certainly help too, because those will fill in gaps. And that's going to be as you grow, then you're going to start, like the first thing is just get something done. And then the second thing is, all right, go back. Now let me fill in the gaps. What am I missing?
Yeah, actually, I have a SQLite database. So if you go to datamovesme.com and in like the search or whatever, or if you Google search and say data moves me and SQL course or whatever, and it's free, it's nothing. Like my logo is broken on the top, but there's data in it and you can write SQL syntax and get answers back. And there's 4 tables and the joins aren't even that interesting, but you can start to get a feel for it.
Let's get your hands dirty. And the best is if you can make a project out of it, or you can start to get, your mind thinking, right?
All right. Awesome. Well, Matt, that is all we have time for today, but thank you so much for joining. I always enjoy chatting with you. And I think you shared some awesome nuggets.
It's good catching up, Kristen. And thanks for thinking of me to be on this podcast. And for everybody who tuned in, thanks so much for making an investment in yourself for this hour. It was really good and interesting to hear some of your questions, and I hope the best for you guys.